The Nifty over the moon as well. Look at that. I mean, say 70 points higher now.
In the last 1 hour, we've given up gains. So now below 19,500.
The mid-cap index is managing to hold up with a gain of around 0.6%.
It's a bit of a disappointing session, right, on the large cap index. You know, yesterday it was such a solid session. Banks did well, large caps did well, and you were just hoping that today you're going to see that follow through.
The close, the news is that it is ending up to be quite a weak session now, at least for the headline indices, Nifty and Sensex both in negative territory.
Hello and welcome to Market Today, the show where we track around 6 hours of the day's trading action in just 5 headlines. I'm Nigel D'Souza. Here are the top headlines for the day. A rally sparked by firm global cues fizzles out. Sensex and the Nifty raise early gains to drop in the red. Traders turn wary ahead of the annual meeting of central bankers in Jackson Hole. Stocks linked to Chandrayaan-3, including MTAR Tech, Paras Defense and Centrum Electronics, defy gravity. Qatar's 8,000 crore rupee investment in Reliance Retail pushes the company's valuation to $100 billion. That's double the valuation it commanded 3 years ago. Reasons include an addition of over 30 million square feet of retail real estate, over 30% growth in revenues, and more than 14 acquisitions of both brands and businesses. Block deals ruled the market action. Transactions worth 10,000 crore rupees are closed in a single day as promoters and private equity investors continue to liquidate their holdings. The largest deal saw Baring PE sell close to 27% stake in Coforge for around 8,000 crore rupees. India creates history. Chandrayaan-3 moon missile successfully lands a rover on the surface of the moon. MTAR Tech surges on being the key component supplier for the mission. And Baring's PE sells its 26% stake in Coforge worth approximately 8,000 crore rupees in a large trade. The stock gains close to 5%. Well, here's what we have lined up on the show for you. It's a power-packed one, as always. In Market Opinion, we have Sanjay Mukhi, strategist and head of India Equity Research at JP Morgan India. And Big Corporate Voices, we have Jean Salata, the head of Baring Private Equity Asia, and chairperson of EQT Asia, and Hari Gopalakrishnan, partner and co-head India at Baring Private Equity. Well, the first headline and the day's trading action then. A rally sparkled by firm global cues fizzled out. The Sensex and the Nifty erased the early gains to drop into the red. Traders turned cautious ahead of the annual meeting of central bankers at Jackson Hole. Sensex and the Nifty, well, they ended 0.25% lower to slip 1% intraday from the highs. The Nifty Bank fared better than blue chips to end flat with mild positive bias. The mid-caps continue to buck the trend, with the index ending 0.25% in the green. Surbhi Upadhyay joins us to fill us out with all the market action on the large trade. Surbhi?
Well, today's session will be classified as a disappointing day for the bulls, and that is because our market could not capitalize on what looked like a pretty solid day from the global standpoint. Global equity markets were actually rallying pretty nicely thanks to better than expected results from Nvidia and a cool-off in global bond yields, in the US 10-year yield in particular. But none of that really mattered because by the end of trade, the Nifty actually decided to go home with a cut of about 0.3%. So what was the problem? Banks. Now, the bank Nifty simply could not build on the rally that we saw on Wednesday. Today was a complete sort of reversal because the morning started off okay for bank stocks. By the afternoon, they completely cooled off, and the bank Nifty was absolutely flat by close, going home with a gain of just about 16, 17 odd points. If you thought IT will come in and make up for the fall in bank stocks, that wasn't happening. Beyond Infosys, all the other large cap IT names like TCS, Wipro, etc., they were all in negative territory. There were other Nifty losers like ONGC falling because crude oil is down. Power Grid and some of the metal names like JSW Steel and Hindalco were also weak. So where was the buying? Well, in some of the FMCG names, so something like an ITC or a Britannia, that's where we saw some green. Also in Asian Paints, because the fall in oil prices is good for paint companies. Mid-cap markets also lost a bit of that momentum. The mid-cap index finally ended with a gain of just 0.25%. The small-cap index was actually negative. So that's another sign that shows that there was some caution in the market today for sure. Should mention Coforge here. That stock rallied almost 10% as the promoter entity, Bearings PE, sold out its entire stake, which is just above 26%. Last but not the least, space stocks continue to be very, very excited after the successful Chandrayaan-3 mission. So stocks like MTAR, Paras Defense, Centum Electronics, a lot of these mid-caps were quite excited and buzzing in an otherwise lackluster and weak day.
Thanks a lot for that, Surbhi. Well, in market opinion, Sanjay Mukim, strategist and head of India equity research at JP Morgan India, says that as liquidity is tightening, there is a shift from growth to value. He also lays out his top sectorial picks.
As liquidity is now tightening and central bank balance sheets are now starting to contract everywhere, you get this shift from the growthy style and the growth stuff that works to value that tends to work when liquidity becomes tighter. Wage growth seems to be improving everywhere. Consumer confidence data is starting to look up. So yes, the cohort of the bottom 80% of India, the mid to low income households, does seem to be in a better place than it was previously. We like real estate, and I heard you guys talk about it. The momentum is strong. It will likely remain strong. The penetration of households, apartment ownerships in India is extremely low, and there's years worth of potential headroom for that to continue to grow. The second space we like medium term is hospitals. Again, there is a lot of shift amongst the consumption of healthcare from public to private, along with the improvement in medical tourism. You are seeing the advantages of Indian hospitals play out, and valuations can be a bit daunting, but that space also looks very structural to us. A slightly longer term space that we like is, or we have liked historically, is insurance.
All right, let's move to the second headline now. And the big corporate story, Reliance Retail's cart got 8,278 crore rupees boost from Qatar Investment Authority yesterday. This latest investment, which was for 0.99% stake, values the company at $100 billion. CNBC-TV18's Shilpa Ranipeta joins us now. Shilpa, well, the valuation has doubled from around 50 billion to around 100 billion in just 3 years. Decode for us all the factors that led to this kind of a milestone.
Well, an 8,278 crore investment from the Qatar Investment Authority has valued Reliance Retail at a whopping $100 billion. This valuation, in fact, has doubled in just 3 years. Towards the end of 2020, remember, when Reliance Retail had raised about 47,000 crore rupees from 8 different investors, it had valued the company at about 4.21 lakh crore rupees or $50 billion. And this doubling of valuation, in fact, comes as no surprise if you just look at the sheer growth and expansion of the company in just the last 2 to 3 years under the leadership of Isha Ambani. Now, the company's revenues in FY23 grew about 30%. They grew about 26% in the previous fiscal. And in just 3 years, it has added about 5,000 new stores, over 30 million square feet of retail area across 20 different formats, taking the total count to over 18,000 stores in the country. But first, let's look at what this behemoth of a business even comprises. Now, Reliance Retail Ventures, as we know it, has its core retail business. Then there is the Reliance Brands, which houses licensed and bought luxury brands. Then there is the newly launched FMCG business. Now, under these businesses, Reliance Retail covers consumption baskets that are across fashion and lifestyle, consumer electronics, FMCG, grocery and pharma. And this is across 20 different formats. And most of these formats were added in just the last 2 to 3 years. Now, for instance, JioMart was announced in FY21. In FY22, we saw some ethnic stores. We saw a gourmet format under Fresh Pick. There was also a 7-Eleven, a convenience format. And then in FY23, saw some big forays as well. For instance, there was a foray into beauty through Tira. There was food through Petromonja. And also the B2B wholesale through the acquisition of Metro. Now, the biggest foray, however, was the FMCG business that it announced exactly a year ago under Reliance Consumer Products. Now, since then, the company has acquired a whole host of regional brands. It has also launched its own FMCG brand under independent spanning categories. Now, this entire expansion of the whole business has been through both the organic and the inorganic route. Now, if you look at a list of acquisitions and investments here, an exhaustive list, about 14 in just FY23, with some notable names like Metro, like I said. A few luxury brands also were acquired. In FY20, 2022, we saw Just Dial, then there was Dunzo also, and there were a whole host of more luxury brands, and then there was e-pharmacy player NetMeds, among others, in the year before that. Now, so there's that. It has grown to become India's largest retail player, and given the spread, there is no close competitor for Reliance Retail currently, and the expansion continues, making it an attractive proposition for any investors. All eyes now will be on the upcoming Reliance AGM for any further commentary on more value unlocking and possibly a timeline for an IPO.
Well, moving to the third headline now, the Indian market has witnessed an unprecedented amount of selling from promoters. Private equity investors as well as strategic investors worth a whopping $10 billion have sold in 2023. According to investment banking sources, this trend is only expected to pick up in the near term. In fact, deals worth 10,700 crore rupees got executed in a single day across multiple blocks. Nimesh joins us to fill us in with more details. Nimesh, well, big block deals on the Lal Street, isn't it?
Well, it is indeed unprecedented, right? $10 billion of stake sale from promoters and private equity investors in 2023 alone. And in a single day today, there were blocks worth 10,700 crores, which is $1.3 billion got executed across multiple blocks. So there were large blocks. I'll start with Coforge first. That was a big block today. 26% of the company's equity got changed hands. The Bearings private equity was a seller in today's block, huge block. They've raised close to 8,000 crores in a single block today. So multiple buyers today, but again, there was a large block in Coforge today. So that was the first big block deal. The second one was Manappuram Finance. Again, a large block, 9.9% of the company's equity got changed hands. I understand private equity investor, which is backed by Apex Partners. They were the sellers in today's block. So it's technically a clean out trade from the private equity. And in terms of buyers, there are multiple buyers in this particular block as well. But again, there it was a deal worth close to 1,400 crores. So that was another large block deal. The third one was Max Financials. Even in Max Financial, there was a block of close to 3.5% equity changing hands. I understand the promoter entity was a seller in today's block, so the disclosures will be important in that as well. Even that block was worth close to 1,000 crore rupees. The fourth one was RBL Bank. Even in RBL Bank, there was a block close to 1.7% equity changing hands. I understand from a seller perspective, and FI was a seller in today's block, and there could be some multiple domestic mutual funds who were buyer in this block. That was worth close to 235 crore rupees. So these were what got executed today. But if you look at in the very recent history, some very large blocks got executed right on the exchanges. The one which stood out is SGS Enterprises, a large block. 30% of the company's equity was sold by private equity investors, and they raised close to 540 crore rupees. The one large block was Adani Power. The promoter entity sold nearly 8% to GQG, and they raised 8,000 crores in a single day, selling that 8% stake worth 9,000 crores. And the last but not the least was Interglobe Aviation. Even there, Ganwal family sold 4%. There is another 2,800 crores by a block deal. So, again, the feedback is, while we are seeing a lot of block deals from promoters and PE investors, looks like the trend is going to continue. And the overall feedback is there is still a lot of supply coming in terms of blocks where the private equity are going to be a large seller.
Thanks a lot for that, Nimesh. For the time being, though, we'll slip into a short break. We'll be back in a jiffy with the other headlines that we're tracking for you. Don't go anywhere. Welcome back. You're still with us on Markets Today. Well, let's go to the rest of the headlines that we're tracking for you, which brings us to the fourth headline today. India created history yesterday with the Chandrayaan-3 moon mission successfully landing a rover on the surface of the moon. MTAR Tech was up close to around 4% as it was one of the key suppliers to this mission.
We have actually supplied the major systems for the mission, right from the liquid propulsion engines for second stage, then the cryo engines, the complete turbo pumps, injector heads, gas generators, which form the core of the cryo engines, and various other valves and safety couplers, etc. So these are the main part of the total initial launch of the vehicle, and at the later stage, the third stage of the launch vehicle. We have an order book of, as of June 30th, of 100 crores and odd. So we are looking at about 80% of the orders getting executed this year itself. So that's why we said we gave a guidance of 45 to 50%, 830 to 860 crores of revenue guidance moving forward. Now we are looking at probably 25 to 30% of revenue growth year on year. We have going to get many orders moving forward in the next 3 quarters, as I mentioned. We'll end up with an order book closing of about 1,500 crores by end of this year.
Well, turning attention to the insurance space then, IRDAI has approved substantial changes to the reinsurance regulations with the aim of fostering a more robust and competitive reinsurance landscape in the country. Yash is standing by with more details on that. Yash?
Well, Nigel, as you pointed out, these are crucial changes as far as the Indian reinsurance market is concerned, and I want to draw your attention that we have one listed entity in this particular space, that is GICRE, India's sole reinsurance company, and these amendments proposed, or rather amended by the regulator, on the face of it come as a negative news for GICRE. I'll tell you why. There are 2 important points to look at. The first one is reduction of the initial capital. For any reinsurance company to start business, so far they had to submit an initial capital of 100 crore. That has been reduced to about 50 crore as per the amendments, which essentially will attract more players into the space and increase competition for a company like GICRE. Second one is rather technical but very important, and that is essentially the change in the order of preference when it comes to taking the mandate for reinsurance on different contracts. Here what used to happen is, as per the current system, any particular contract would be given to GICRE. Along with that, 3 other foreign reinsurance branches. A quote for reinsuring that contract would be taken. Then, of course, the lowest quote would be disclosed to GICRE, and GICRE was given a chance to match the lowest quote if they want to take that particular contract. That system will be done away with, and rather what would replace it would be that a contract would be taken to GICRE and 3 foreign reinsurance branches, and straight away, without disclosing the lowest quote to GICRE, the mandate or the contract would be awarded to the lowest bidder as far as the reinsurance contract is concerned. This essentially takes away the advantage of preference which existed with GICRE so far. So all in all, on the face of it, negative for GICRE, and of course good for the sector in terms of attracting more players into the space.
Okay, all right. Thanks a lot for that, Yash. Well, moving to the 5th and the final headline today. Coforge gained close to around 10% as Bearing PE completely exited the company. Now, we learned from sources that it sold over 25% stake in Coforge via a large trade. Remember, Bearings had close to 70% stake in the company in 2019. Rima joins us with the key takeaways. Rima, tell us more.
Thanks so much for that. You know, what's interesting is the kind of price reaction. One would assume that when there is such a large block deal, the promoters are exiting, they're completely selling out their entire stake. And we're talking about big amounts, right? 8,000 crore of a deal, 27% stake nearly, yet the stock is rising in trade. I think the big key reason is that, you know, the fear of further promoter stake is now, stake sale is out of the way. Now, Bearings had about a 70% stake in the company 4 years back. They've been periodically selling their stake in the company, and that created an overhang. The fear of when is the next time Bearings is going to come out and sell in the open market, and that in a way capped the stock upside despite very strong fundamentals. So now with Bearings completely out of the picture, there is no overhang of a further stake sale. In fact, the fundamentals of the company have been pretty strong, which is why despite so much of a promoter stake sale, right, from 70% now down to 0, the stock has done pretty well. In the last 4 years, the stock has practically doubled. When the promoters had a 70% stake, the stock price was close to 2,322 crore. Also, every time the promoters sold, it was lapped up by marquee investors. The mutual fund, the FPI holding in the company is also very strong at 25 to 30%. The revenue growth has been strong. FY22, FY23, the company grew at 37 and 22% respectively. In an uncertain year like this year, the company is guiding for a 13 to 16% stake. Also, what's interesting to note is now, the free float in the stock will go up, and that could result in, more buying associated with the stock linked to the FTSE indices. So, according to Nuvama's analysis, we're looking at some buying on account of FTSE. Back to you.
On Coforge, It's the business that's doubled in size since we first invested in the company 4 years ago. Doubled in revenue, doubled in profits. And so it's accomplished much of what we set out to do, but the future of the business is also extremely bright. First of all, Sudhir Singh, who's the CEO of Coforge, is an excellent manager who's executed impeccably over the last several years. In fact, since we bought into the business, he was the CEO at the time that we invested and has continued to run the business and grow the business. He's done an extraordinary job, and I think he's very credible with investors.
Well, on to the commodity space, and crude oil prices were under pressure ahead of the annual meeting of the central bankers in Jackson Hole, as well as weak manufacturing data that came in from major economies. Manisha joins us to fill us in with regard to how the oil market is moving. Manisha?
It's a 3-week lows on the crude oil prices because of slowdown in Chinese demand, and the US that could continue with restrictive policies going forward seems to be weighing on. Also, when you look at the inventories, even as the crude oil inventories declined by 6 million barrels in the previous week, it is the gain up or build up in the gas and distillate inventories that tells you that the fuel demand on ground seems to be slowing down. And then the production numbers seem to be on the positive side. The US production of crude oil is the highest in 3 years at 12.8 million barrels per day. It is also the weak PMI data that we've seen come in from US and Eurozone that seems to be weighing on. And then there are resumption of conversation between Iran and Turkey pipeline that could see 450,000 barrels per day of supplies coming back into the international markets. Iran also is estimating 3.4 million barrels per day by the end of September. So every major oil producer is looking to increase supplies in the global markets, and the demand is not catching up. Add to that the fact that the US could also ease sanctions on Venezuela oil exports. That would mean more oil coming into the market. This is going to be a second straight week that we are looking at decline in crude oil prices. We already are down 2.5% for the week with the day still to go, and the markets do believe that the pressure could just about continue.
Thanks a lot for that, Manisha. Well, that's on our wish list. Lower crude prices is something we would love to see. On that note, though, we'll wrap up on this edition of Markets Today. You stay with us.